James Check, who's my favorite Bitcoin analyst and really the only Bitcoin analyst I follow, and he's got really just incredibly good analysis based entirely on human behavior. So all of his analysis is what is actually happening on the Bitcoin blockchain. James Check can do a bunch of analysis and tell us, based on every price dip that Bitcoin has ever taken, how long this bear market will last. So he, in his most recent analysis, which is really fantastically good, he uses 8 different models and analyzes with those 8 different models every price drawdown in Bitcoin's entire 17-year history. And he comes to the conclusion that the earliest that this bear market is gonna not feel like a bear market anymore is probably March or April. Now, he also says there's a 60% chance that $60,000 was the low. The thing is that it's not going to not feel like a bear market until we're consistently trending up. You can still be in a bear market even if the price has gone the lowest it's ever going to go. So he says 60% chance 60,000 was the bottom, but that means we could have some time pain, what he calls time pain ahead of us. Time pain, there's price pain and time pain. Price pain is when the price is dropping and it makes you feel bad. Time pain is when the price is grinding sideways and you feel bad. The price is not actually getting worse. It's just grinding, and that grinding is making you feel bad. That's called time pain. According to James Check, we have until probably, at a minimum, the end of March or sometime in April would be the earliest. That's the fastest that Bitcoin has historically switched from a bear market back to a bull market using a bunch of methodologies, whether you measure from the all-time high, all different ways of measuring. The earliest models have it in sort of end of March and April. The midpoint of various models puts grinding sideways until June and July, and there's a few outliers that are in August, and none of the models show anything beyond August. The only thing that is later than August is people who say the average bear market lasts a year from the peak to the trough, and they're measuring from October 6th, and they're saying, well, we're not going to get the end of the bear market till September, because the last time it was October 6th, so therefore it'll last at least close to October 6th. Now, James Check says, look, that is a model based on nothing but a calendar, which is the least reliable model. It's not based on human behavior. It's not based on anything. So anybody saying September or October, we're going to grind sideways till September, October, is basing that on nothing but flipping through a calendar and counting days and just assuming that bear markets last for a year, which is, again, is not consistent with the historical patterns and all of that. So if you actually base it on human behavior and data, you're getting sort of earliest, is late March or April. The latest is, call it August. And the midpoint is probably in the June, July timeframe.